Hey traders, Jason here from Love Brothers. In this video, I'm going to cover some long-term monthly charts of several of this year's biggest winners. Okay, these are your leaders. Okay, one way to analyze the market, which I do all the time, is by looking at the breadth indicators, see how much support there is for the market's movements. Another is to just look at the leadership stocks. You've heard that as the leaders go, so does the market. So if these stocks are doing well, the market's going to do well. If these stocks are starting to weaken, then the market's probably going to do the same thing. Okay, it usually takes time for leadership to change. So if, during that change, the market's going to struggle. So let's check out some of these leadership stocks and see how they're doing. All right, here's Apple. Obviously, it's been a big winner. Okay, nice steady move up, and I should say that in all these charts, they're the monthly charts, and the moving average you see is the 10-month moving average. Okay, so it rode its 10-month over, 10-month up, consolidated for a year, broke out, came back down, tested the 10-month, and now it's shot up. Okay, largest company in the entire world. Look how far it is from its 10. Okay, stock's doing really well. I think it's going to hold up. I think it's going to continue to do well. Who knows? In a couple of years, it could be $3 trillion instead of $2 trillion. But in the near term, it has run pretty far from its 10, and it probably needs to move sideways in a range to allow the 10 to catch up, or maybe drop back a little bit and catch it somewhere up in over here in the open space. Either way, could it go up another 10 or 20%? Sure, but is it going to double from here without it having some sort of an extended rest period? Probably not. Here's AMD. Okay, base here. Not a very good trend line there. Let's see if I could draw another one. Okay, trend line. So we had a base here for over a year, breaks out, runs up, another base at a higher level, gets scooped up by its 10 moving average, breaks out, consolidate again, getting support from the 10 moving average, breaks out again. Now it's up at a new high. Okay, stock's doing incredibly well. But again, just like Apple, it has run really far from its 10, and it would benefit from moving sideways to allow the 10 to catch up, or it could even drift down a little bit and catch it somewhere below the current price. Okay, stock's doing incredibly well. The market's doing really well. Stock's probably going to go higher. It's probably going to go over 100, but it could take a while to do that. Okay, it has run far enough to believe that even if it goes another 10 or 20% right now, it probably isn't going to go too much further. Amazon, nice support from the 10 here, 10 here, 10 here, runs away a little bit, consolidates for almost 2 years, breaks out and runs. Now it's a huge distance from its 10. Okay, like the others, it's doing great. It's going to join Apple. It's going to be a $2 trillion company. It's probably going to be bigger than Apple at some point. That's just my opinion. So overall, the stock's doing great. But in the near term, given the fact that it just went from 1,1700 up to it just doubled this year. It doubled off of this year's low. It probably needs time to digest the gains to grow into that valuation, and that'll take some time. So could it go up and print a new high here a couple more months? Sure, absolutely. But at some point in time, it's going to have to settle into a range that lasts quite a long time. Okay, and it happens. Okay, there's range here for 5-6 months. There's a range here for 5 months. There's a range here for who knows how long, because I can't see the chart back here. Obviously, this range is really far. Okay, it's easy to get excited about the stock going up and up and up, but the reality is the stock goes up and then it rests, it goes up and then it rests, it goes up and then it rests, and it just went up a huge amount. So if it rests, a resting period can last a while. Billy, okay, went public, traded in a wide range here. You can draw some trend lines here. Okay, 2 trend lines that contain most of the price action. Then it broke out earlier this year and has run up quite a bit. So again, just a stock that's kind of run a little bit far, needs some time to move sideways. It'll take about 3 or 4 months for this moving average to kind of come up here. So a rest is needed to digest the gains. Chewy, nice base, broke out, went up. What's this, like 8-9 months in a row it's up. Okay, needs some time to digest the gains, needs some time. Okay, doesn't mean it's not going to move higher long term, which I think it probably will, because the stock obviously doing great. But sometimes stocks get ahead of themselves and they need time to rest and digest the gains. Could it go up from here 10, 20, 30%? Sure, it can go up to 90, it can go up to 100, but at some point in time, we're probably closer to the end of a big run than the beginning of a big run in terms of what's going to happen over the next 6-9 months or so. Copa, really steady mover, lots of support from the 10 here, 10 here, 10 here, consolidation pattern, resistance line at 180, and then boom, it goes crazy. Look how far it ran from the 10. Okay, it's coming down hard this month. Probably going to need some more digesting here, allow the 10 to catch up before it actually even goes up and tries to test those highs. Okay, fantastic stock, doing really well, but given what's taken place, I think it probably needs time. Could it rally up to here right now? Sure. Okay, but building gains on top of big gains is not easy. So the risk reward is not as good. The easy money has been made. Got to be a little bit more careful. Docu done incredibly well, based out of the after going public, broke out, and look how many months in a row. Got some support here from the 10, and then just ran away. So stock's done really well. It needs a break like the others. Okay, could it come back? Could it, next month? Could it form like a nice big candle here? Sure, it could continue up, but we're probably closer to the end than we are to the beginning. Okay, 5 years from now, it could be 1,000. I don't know. But in the next couple months, it probably has limited upside. Facebook, this pattern here, okay, with resistance there, support there, that's an 80 point pattern. So that measures up to 300, which is exactly what the stock got right up here. Stock's going to do great. I don't know what the market cap is right now, maybe 800 billion. It'll be $1 trillion company just like some of the other big tech companies. It's going to happen. The stock's going to go much higher. But in the near term, given how far away it is from this 10, maybe we need some sideways movement to allow the 10 to catch up. Maybe we just need a little bit of a drift back, and then it could go up. I mean, when the stock goes up a lot, it's hard to imagine the stock pulling back because it's doing so well. But like even right here, 3 consecutive months it pulled back in a bunch. Here we had, 5 out of 6 months it's down. 2 down months in a row. It happens. Okay, so after we get a huge run, to get a couple of down months, allow the 10 to catch up, makes sense. Okay, what makes sense doesn't always happen, but still got to keep it in mind, because when you have a stock that it went from 140 to 300, stock more than doubled off its low, the upside is not as enticing as it was. Fastly broke out of a base, huge gain, far from its 10, needs a little bit of time to rest. Could it go up above 100? Could it break out at 100 and go up to 115, 120? Sure, but at some point in time, the stock's going to probably drift down and undergo multi-month, 6-month, 12-month digestion period where it has to, grow into its gains before it can run up further. HubSpot, steady mover, consolidated in here for 16 months or so, broke out, ran up. Now it's got a huge gap between itself and its 10. It'd be nice if it moved sideways, restore some of its energy, and then it'll be ready to move up again. Livongo broke out from a base, rallied up huge. 30 to 150. So this stock went up 5x. It's getting bought out by TDOC. Still, it has run so far. Could it go up another more? Sure. Could it go up to 200? Sure. But we're closer to the end of a big run than the beginning, and a digestion period is needed. Melly, huge winner. Support from the 10, straddled the 10 while it consolidated, then broke out and moved up, straddled the 10 as it consolidated again, and then broke out and ran. So hey, stock moves up, consolidates, moves up, consolidates. What if the stock consolidated up here give the 10 some time to do something like that. Okay, keep it in mind. Doesn't mean it has to happen. Could it break out? Sure, but it could break out and then come back and do one of these and still meet the 10 somewhere over here 6 months from now. Okay, risk, the easy money has been made. It's going to be harder from here going forward. Microsoft, steady. It's been like just a steady climber, just riding its 10 all the way up for many years. It has run kind of far from its 10, so projecting this up, maybe we get some sideways movement for a couple months or a dip back. ServiceNow, same thing. Rode its 10, support, sloppy there, sloppy here. But again, you have move up, consolidation, pops, consolidation, and then this huge run. So, don't be surprised if we get a pullback or consolidation to allow the 10 to catch up, and that's going to take 4 or 5 months. Nvidia acts well around its 10. Lots of support here, support all through here. Once it took out that 10, it dropped. Got resistance there. Then it scoops up the stock right there. Got some support there. And now the stock, look, holy smokes, look how far it is. Okay. Nvidia is a great company. It's going higher. Who knows? And 3-4 years from now, it could be $1 trillion company. Okay. Right now it's probably like 400 billion. So it'll be $1 trillion company too. But in the short term meaning like over the next 6 months or so, probably the easy money has been made. Probably some a rest is needed. Okay, I'm going to go through these a little bit quicker now. PDD, ran far from its 10. Could it go another 10, 20%? Sure, but at some point in time, it's going to undergo, a 6, 8, 9 month resting period. PayPal's been just knocking the cover off the ball. Broke out here, ran up huge. Stock has more than doubled this year. In fact, it's almost tripled off its low. But again, like so many, rallies get followed by digestion periods. Rallies get followed by digestion periods. And this rally is huge. So play it to the long side, but keep in the back of your mind that, hey, the stock is probably overdone here. C Limited, huge support from its 10 here, and then it just went crazy. Stock's doing great. I read a lot of great stuff about the stock, about the company. It's going to go higher in the long term, but in the near term, man, it's kind of hard to ignore like that kind of a big void space below the stock. SolarEdge rolled up and down, went on a huge run. It's up, from $30 to $230, so the stock's up almost 8x. Probably needs some time to allow that 10 to catch up. Shopify, huge winner for many, many years. Lots of support from the 10 here, a little bit in there. Things got sloppy when the virus first came out, and then the stock broke out. Pretty volatile in here, but then boom, straight up, more than doubled. In fact, it basically tripled. Okay, some time is needed to digest the gains. Square, huge breakout. Vertical move. The stock's going to go to 200. It has established itself, as a player in its space. It's not a startup anymore, not a risky company anymore. It is well established, but the stock, from 40, 45 up to 170, it's a 4x move. It needs time off. Tal Education, stock's done really well. Rode its 10 up. You can see here. Little resistance there, then supported it. More support in here. Popped, so we get like a pop, consolidation, pop. So, hey, it would not be prudent to expect the stock to just run up uninterruptedly, okay? It's probably going to, at the very least, it's going to rest for a little bit. Give the 10 a little bit of time to catch up. Tesla, of course, everyone knows about Tesla. Based for many years, broke out, got really volatile in here, but then once it broke out and it went vertical. Obviously, it's risky in both directions. It's risky to go long because on any, the stock just dropped from 500 down to 340, so that's like more than a 30% drop. But it's also risky to go short because at any time the stock could just scream higher. So risky in both directions, but looking at this vertical move and the space here between itself, oops, we got that too, and the 10, don't be surprised if this stock just moves sideways in a really volatile range for a long time. Last chart, Viva, nice support from the 10 here, sloppy there, good support there. Stock moves up, consolidates, moves up, consolidates, and now it just went vertical. What's that, 6 months in a row, declining volume. I don't know, maybe it pulls back here, or maybe it just kind of trades sideways to allow the 10 to catch up. Either way, given this huge move, okay, sure, could it go another 10%? Sure, 20%? Fine, whatever. But given the gains in place, the easy money has been made, and the risk reward is no longer that great for just buying and holding and such. Okay, so the purpose here is to look at the leaders and to get an idea, because if these stocks do well, then the market's going to do well. If these stocks pause or pull back, then the market's going to do the same thing. And I think the message here is that these stocks are incredibly strong overall. They've done really, really well. And if you bought now and just held for 5 years, I'm betting you'd do really well. Okay, a lot of these stocks are going to go, 100%, 200%, 300% moves in the next 5 years. But over the next, 6-9 months, you have to kind of question how much further they can go given the gains in place. All right, thanks for listening. Come check us out at Lever Brothers, where we offer market analysis and trading ideas to the financial community. Also, check out my free masterclass in trading at the link below. All right, see you next time.